What's good, YouTube? Welcome back to my channel. This is trade recap of the day. And if you want to understand auction market theory, watch this video. I am dropping real sauce here. So please pay attention. This is trade recap of the day. Today is June 23, 2026. Today is what, Tuesday or something? So let's get straight to it. So this is the daily time frame on ES. Okay. This is the daily time frame. This is the yearly VWAP. This is the yearly first standard deviation high. Over here is the yearly first standard deviation low. Where are we right now, right? We were at around yearly first standard deviation high. That would mean if the auction is to take higher, that should hold, right? Because usually this first standard deviation high acts as a dynamic support like that, not only on yearly time frame, anything. If we are bullish, price will use this as a dynamic support to go higher. And even if we're not bullish, this usually gives a little bit of reaction, basically, right? So since we were around in this area, I was leaning bullish. Okay, let me bring my good stuff back here. Where is it? Oh my God. Okay. Step back. Let's go to the 7-hour time frame. By the way, I save everything on my Discord. So if y'all are interested, let me know. Okay. Right now, only me. I'm the only one here, but I could open it. And on the Discord too, I'm explaining the same thing. On the daily time frame, we are back at the first standard deviation high of the yearly VWAP. Overnight was insanely bearish, but I do expect this first standard deviation to hold. Daily might still close bearish with a little retracement off of open and consolidate rest of the day. This does not mean sellers cannot pull through. Think of it as a major resistance. If you see sellers absorb around this area with the delta flip, go longs. If aggressive sellers are strong enough to break this area with no buyers follow through, take shorts. Again, same idea. If sellers, where is it? If sellers can push through it, then take shorts. If sellers cannot push through it and delta flip, take longs. Right, let's go back to Discord. On the 7-hour time frame, we did reject first quarterly standard deviation high yesterday. That was what led to the overnight sell-off. Any move above the quarterly first standard deviation high was a failed auction. The only resistance till the quarterly VWAP is first standard deviation high of the early auction. If we cleanly break that today, we might go towards quarterly VWAP. We also took an intermediate low in the 7-hour time frame in London session. That may lead the market to retrace in the New York AM session. So let's get through it. Okay, let's get through 7-hour time frame. What do I mean by that, right? You see that line? That is the quarterly for standard deviation high. That was rejected yesterday, and that is what led overnight to sell off. When overnight did sell off, we took this intermediate low on 7-hour time frame, and we also took this low right here in the morning session, basically, right? So, and we are back inside this fair value. This is the point of control, right? So once we left this fair value, right, and started doing auction here, this move up here was a failed auction, because remember on the daily time frame, if we are bullish, price would use this first standard deviation high to go higher, but we went higher and then we come back and then we rejected it. That would mean on the quarterly or 7-hour time frame, we are kind of bearish today, or in general, not today, but right. But since we're here back at this fair value on yearly standard deviation high, I was leaning bullish towards the high, basically towards upside, right? So that's what I mean. And that on the 2-hour time frame, we can see price finding support in the monthly for standard deviation low. This is what led me to have a bullish bias even the market sold off. We are already at the edge of fair value in the monthly time frame, and price did reverse off of it. So I'm okay with taking longs back towards the VWAP. So what do I mean by that? Okay, understand how I'm framing this. Okay, understand how I'm framing yearly VWAP with quarterly VWAP with monthly VWAP. Okay, that is what auction is. That is what auction market theory is. That is how price behaves. Okay, again, that is the monthly standard deviation low, right? And that purple line is the monthly standard deviation VWAP. Up there is monthly standard deviation high, right? And yesterday we broke monthly standard deviation VWAP and we sold off the monthly standard deviation low. That is also kind of near yearly first standard deviation low. We're back at previous fair value right here, right? We're back at previous fair value right here. Now, since we are at the lower edge of the fair value on the monthly time frame, I do expect this to hold, right? Because if sellers push through, then we would be bearish. But if sellers hold, then that would mean we're just rotating, right? This is a mean reverting market, right? And that's what happens. This low was taken, these lows are taken back inside fair value, right? Fair value, balance market, imbalance market, back to balance market, and then we are rotating again. Does that make sense? That's how you frame your context. That's how you frame your narrative. That's how auction market theory works. Understand where the auction is taking place. Another thing, right? See, this is very balanced right here. Where is it? If I draw volume profile in this balance range, this was fair value. All of this is, in imbalance market. All of that is not fair value, So that would mean once market go from balance to imbalance, then we would seek balance again, right? So that's what's happening. So this is how you build narrative. Okay, this is how you understand context. On the 30-minute time frame, we are way outside fair value of current break, so it would be fair to assume we might retest towards fair value even if we are bearish. The support at monthly for standard deviation low is also a rolling VWAP of previous week, as you can see at the edge of 30-minute time frame. So what do I mean by that? Let's go to 30-minute time frame, right? Again, that within these bands is fair value, right? Overnight we are on fair value. Okay, we are not at the fair value overnight, and what happens is You see this VWAP? That's a rolling VWAP of previous week, right? So if I draw this out in time, that would be the VWAP. But it doesn't account for all these price movement, but it's still something to keep an eye out for, okay? Don't pay too much attention towards that, but it is something to keep an eye out for. So if we are unfair right now, this is unfair market, this is imbalanced market, price would find a way to get back to this fair market and then hold it as a support to go lower. And that's what's happening right now, right? So where do you take your TP also matters a lot. This is actually right here. When I marked it, it was up here, but right now, we are all the way down here. And weekly VWAP is actually now kind of lower. And weekly first standard deviation high is also right there. So again, my idea is go long from here towards this fair value, and then you could take short from there, right? On the 5-minute time frame, again, it's the same thing over and over again. Market auction is the same thing, right? This was my pre-market trade, kind of the same concept, right? We were setting off. I wanted support at the yearly first standard deviation high and monthly standard deviation low. We kind of broke monthly standard deviation low. We didn't quite get here, but I was waiting for market to get back in fair value. Got back in fair value. That green is the lower is of a standard deviation basically. And on the retest, I wanted to take long here, but it just went through. So I kind of waited for it to come back and then took here to this high. Easy as trade, but that's not the trade I want to talk about. This is the trade I want to talk about. Oh my God. This is the trade that I want to talk about, right? Again, so from the daily, well, I got the bullish idea, right? From the 7-hour, I got the bullish idea. From the 2-hour, I got the bullish idea. So now on the smaller time frame, you just make that use of that idea and find a reason to go higher, right? So this is where market opens, right? Market opens. We test this yearly first standard deviation high and keep an eye out, okay? Until market opens at 9:30, we have not tested this. We did not test it at all. We did not test it at all. So what does that mean? What does that tell you? That tells me that market is waiting to see how price reacts around this area. Okay. And once market came at yearly first standard deviation high and immediately gets bought back up. You see, immediately gets bought back up. Now this is where my entry comes in. And you guys know I cannot live without this thing. So let's see. Oops. Did I mess it up? Okay. What the hell? Get rid of that. Okay, let's get rid of that. Where is it? Where is Orderflow? Where is Orderflow? Right here. Right here. I want y'all to pay attention. Okay, this is footprint, and 8:30 is right here. You see, that's 9:30, that's 8:30. This is central time, that's why this is 8:30. But market goes lower. Market goes lower. Taste this yearly first standard deviation high at, what is it? 7411? No, 7417.25, right? 7417.25, which would be this, right? Which would be this. You see all of the sellers trying to push through, all of it sellers trying to push through. But where does market close? All the way up here. That would mean all of the sellers are trapped, right? That would mean all of the sellers are trapped and market goes higher, right? And this order flow is this price action. So what was I looking for? If price returns back to this area where previous sellers got trapped, right here, right? Previous sellers got trapped, I would look to get an entry, right? And price retraces back there, right? See, retraces back in this yellow zone. Keep an eye out. Okay, this is very important. Retraces back to that yellow zone. And what does market do? Right? Retraces back to an area of support to where previous sellers were trapped and delta flip from negative 469 to 240. You see this? You see this delta flip? Negative 469 to 240. That would mean sellers are officially trapped and buyers are engaging. Everything aligns here, right? Everything. My daily, my 7-hour, my 2-hour, my 30-minute, my 5-minute, my 1-minute, my order flow. And then I just take it without, what else do you want me to say? I take it, and where do I take it? All the way back up to upper edge of value, which is the first standard deviation high. And you see how it kind of acts as a resistance. And price might just, rotate through here now, VWAP and that. I actually wanted to take off at this high, which would also be the VWAP. But I wanted to see how price would react. And on the order flow too, I didn't see anything, to be honest. I don't know where that is, but you see it just cleanly breaks through. So that gave me even more confidence. Okay, we might go and test higher. And I got off here at 64 points. 12-hour trade. That's how you frame your context. That's how you frame your narrative. All right. Thank you so much, guys, for watching. Please hit the subscribe button, like button, share button, whatever. And if you want to know more about my way of trading, my way of understanding the market, please let me know. I can make videos. Okay. That's it. That's it. But I hope you realize how important it is to understand where the auction is taking place, how important it is to understand where market participants are willing to participate and market participants are not willing to participate. Okay, that is very, very important. Okay, so that's why when I say people talk about order block or fair value gap, it works. Maybe it works for you. And if it works for you and you're making money, good. I am super proud of you and super happy about it. But What you're not using is market context. Okay, what you're not using is market regime, understanding the environment we're in. A fair value gap is not going to work every time, and order block is not going to work every time. Why is that the case? That is what you understand through auction market theory. Okay, if you just come in every day and make a 4-hour gap, and if we get a 15-minute inverse or whatever, then I'll take longs. It doesn't work like that. That's just pattern trade, right? But if you build narrative around what the auction is, where the auction is taking place, where the market participants are willing to willing to take part in the market, then it helps you, regardless of the market regime. And even more than that, you can learn what do you call gamma exposure, gamma flow, options flow, right? All of those things, right? That helps a ton. That's what I'm trying to say. Okay, I'm not talking shit about ICD because I used to trade ICD back in the day. Okay, that helps. It helps you build what the daily bias is. It helps to build where the aggressive participants are. That is fine. What I'm trying to say is there's nothing wrong with adding better context to your trading. That's what I'm trying to say. And order flow and auction market theory and options flow, all of these are way better than just, ICT and, drawing boxes or whatever, right? So yeah, that's what I mean. I hope you guys enjoyed this video. Thank you so much for watching. Not watching. What the? Thank you so much for watching, and I'll see you guys in the next video. Thank you.